Ladies and gentlemen, good day and welcome to Q3 CY23 earnings conference call of Huhtamaki India Limited hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Jain from ICICI Securities. Thank you and over to you, Mr. Jain.
Thanks, Nirav. Good afternoon, everyone. Thank you for joining on Huhtamaki India Limited Q3 CY23 results conference call. We have Huhtamaki India management on the call, represented by Mr. Dhananjay Salonke, Managing Director, Mr. Jagdish Agarwal, Executive Director and Chief Financial Officer. I would like to invite Mr. Dhananjay to initiate with the opening remark, post which we will have Q&A session. Over to you, sir.
Yep, thank you. Good afternoon, everyone. This is our third investor call, and this is in line with our promise and what we made in last 6 months ago that we would like to engage with various stakeholders. And I'm again happy to be here to kind of take you through to the last quarter as well as year-on-year performance, what are our strategies, and then of course engage with you on various aspects of what we are doing. You would have seen, before we start any further discussion, let me have a disclaimer of our safe harbor statement that whatever we discuss is not really anything like a forward-looking statement and so on. So that's, I would like to put it on record. Coming to the performance of Q3, what came out very clearly that our performance in terms of bottom line, that is EBIT, PBT and EPS improved significantly quarter on quarter as well as year on year. That is basically giving a very strong indication of our strategic positioning, what we have taken in terms of driving the sustainable business. However, the overall volumes continue to be challenging. At the same time, you would observe that quarter on quarter there is a slight improvement in the volumes, and they are clearly falling in line in terms of the strategy what we have made for our long-term sustainable growth. Our investment in terms of operations and technology continues to be a focused area, and that's something which I will put little more insights when I come back after handing over to Jagdish for the financial update. So overall, we are going in a right direction, and that is, as we said earlier as well, this is going to be backed up by our important focus on innovation and offering sustainable packaging solutions to the industry. And that motivation, that inspiration is coming from certain aspects where we are getting recognized for the awards for the best packaging. And last quarter we received 3 awards from IFCA Star Award 2023. So we received award for recyclable bulk bag for having their exceptional drop resistance. We got an award for certain specific tactile effect on pressure sensitive labels and soft touch. So certain focuses what we are giving on innovation are clearly also are recognized by the industry. So while I come back to you, with more details on our innovation, I will hand it over to Jagdish Agarwal, our CFO and Executive Director, for taking us through to the financial highlights, and then I will come back again.
Thank you.
Over to you, Jagdish.
Thank you, Dhananjay. Good afternoon, everyone. Again, a pleasure to present the financial performance of Huhtamaki India Limited for the third quarter and the year so far. However, before presenting the same, considering that the holiday season is about to begin in India, I would like to start by wishing everyone on this call safe and happy holidays. And Diwali being the festival of light, I hope it brings happiness and hope to one and all. Let me now move to the business performance of Huhtamaki. As regards the key financial indicator, the volume continued to remain under pressure in Q3, impacting the top line on YOY basis, though we have started seeing improvement on quarter-on-quarter basis. However, the bottom line has shown significant improvement for both Q3 as well as for 9 months YTD. And this is a result of continued focus on operational efficiency, mix, and partially due to stabilization in the input prices. In spite of top line contraction by almost 15% in Q3 on YOY basis to rupees 4.4 billion, the EBITDA has nearly doubled to rupees 488 million in third quarter. For 9 months, while the top line has shrunk by around 15% to rupees 18.96 billion, the EBITDA has increased by 15% to rupees 1.48 billion. The EBIT for the quarter at 379 million compared to just rupees 40 million is way higher on YOY basis. Similarly, profit for the tax for the quarter stands at 304 million against a loss of 47 million year-on-year basis. On 9-month basis, EBIT has improved to 1.1 billion, again up from 636 million, and PBT has improved significantly to rupees 862 million as compared to 399 million. Other than the regions cited just now, the improvement in EBIT and PBT is also driven by lower depreciation. So as you all know that we have changed our fixed assets useful life from Jan 2023. That has a positive impact on our depreciation charge for the 9 months by 228 million. And for third quarter, it has impacted positively 88 million. Net profit for the quarter at 323 million has improved to 5% of sales. If we look at YOY basis, it was a meager 0.01% or 0.4 million on similar quarter last year. For the 9-month period, net profit has improved to 822 million from 328 million. This represents 4.3% of sales as compared to 1.5% in the corresponding period in the previous year. However, this is partially driven by one-off reversal for uncertain tax provisions of past periods in couple of quarters in this year. EPS for the quarter stands at 4.27 per share, substantially higher on YOY basis, and for 9-month period, EPS stands at 11.16 rupees, again significantly higher on YOY basis. Like Dhananjay talked about that, when we compare our results either on YOY basis or quarter-on-quarter basis, extremely improved performance except the top line. Moving on to the debt and liquidity position, net debt has reduced by 1.82 billion on YOY basis, and this reduction has helped improve overall liquidity. Debt equity ratio at around 0.3 is an improvement over 0.4 witnessed so far in the last 3 quarters. Short-term borrowings have significantly reduced on account of prepayment or lower drawdowns from the lines. Liquidity is strong as we have sizable limits which were mostly unutilized at the end of the quarter. Working capital is a standout this year with all the boxes getting ticked into green. The receivables are decreasing, inventories reducing, though payables are at trade higher, mostly because a higher outlay for capital expenditure. So overall cash position has improved greatly and as a consequence of improvement in net cash flow position from operating activities. To sum up the financial performance, I would like to say that we are on the right trajectory and all the measures taken in the past year or so have now started yielding results, which is apparent from the improved financial performance of the company on almost all the parameters. Also, I want to highlight key points before I hand it over to Dhananjay. Key focus area where we are focusing, one of them is operational efficiencies. We continue to focus on the footprint optimization, cost optimization, supply chain sourcing optimization, efficiency, and overall process optimization. This is now the core of our strategy, and we believe this will enable us to remain focused and drive responsible and profitable growth. The number 2 point which I want to highlight is a corporate governance and risk management. Our commitment to strong corporate governance is in line with letter and intent of law and regulations, and is second to none. Our board of directors provides a robust oversight which helps ensure that our business decisions align with the interests of the shareholders. I would like to place on record my gratitude to the entire board in this regard, and personally it has been a great learning experience for me, interacting with a highly knowledgeable board, helping enhance my vision as well. And the third point is sustainability. The increasing importance of sustainability is not lost on us, and we are cognizant of our responsibilities to reduce our environmental footprint with a positive contribution to the entire ecosystem in which we operate. Blue Loop is one of the strategic initiatives in this direction to begin with first choice in sustainable packaging solutions, and this is the core of our 2030 strategy. The company has always remained committed to its stakeholders, focused on technology-enabled innovations and operational performance and realization of value for its product by engaging constantly with our customers. We appreciate your continued support and investment in our company. With that, I'll hand it over to Dhananjay.
Yeah, thank you, Jagdish. So, you mentioned about our innovation and enterprise-wide Blue Loop solution or branding. I would like to kind of expand this further. So just to everyone, if your presentation is open in front of you, I'm referring few slides, and this is about slide number 8. You can go to the Blue Loop. In last investor calls, also I kind of given little bit background about what we are talking about here. The Blue Loop is nothing but the our entire offering in terms of sustainable packaging product solutions. The Blue Loop is basically enterprise-wide brand, which is aligned with our 2030 strategy, where we are aspiring to become a first choice in sustainable packaging solutions, which will be driven by our investment in technology and the aptitude for operational excellence. So what is our 2030 vision? By 2030, we are really looking from packaging converter, which is our core business definitely, to move to the not only from a packaging converter to the packaging technology innovation leader and sustainable packaging solution provider. And how would we do that? By introducing game-changing technology and solutions with world-class efficient manufacturing and supply chain footprint available world globally. And these products will be available to our global customers. What are the products which we are talking about? We are moving from a complex and non-recyclable products to mono-material laminates, which are designed for recycling. And in this area, we are offering 4 streams: the mono-material based laminates, polypropylene based laminates, paper based laminates, and then PET based laminates. And basically, those are essentially mono means one material, which enhance the recyclability. Though these products are simple, as I said, they are mono-material, and most of them come with a weight reduction, and which means very important step for environmental preservation, which is the CO2 reduction, and of course they are recyclable. While all these offerings are on from these products, very important thing what they ensure that it ensures the protection which is required for food packaging and the packaging of daily essentials in terms of barrier properties. As I said, they are recyclable, and then in a market like India, we also cannot ignore the affordability of it. So they are affordable in terms of competitive pricing against the transformative alternatives. So last time we talked about the investments which are upcoming in our Silvassa unit, and we are very close to starting the equipment. So as the new equipment starts, we are also parallelly and equally focused on developing the strong projects pipeline working with our customers in terms of, and those are in domestic market. Those projects are also in international markets. We are also studying various packaging machines available in our customer lines to ensure that our Blue Loop offerings also work on their machines, so that it enhances and it enables the smooth transition to the new product offerings. So Jagdish talked about how are we really putting our strategy in place to make sure that we have a sustainable business. While I spoke about innovation, which is sustainable packaging products, and we are also equally focusing on making those sustainable products sustainably. And that is where the sustainability is coming in picture and very important from our achieving our 2030 strategic vision. On sustainability part, we are focusing on climate actions. We are focusing on sustainability by design in terms of our infrastructure. We are talking about how do we preserve or conserve the resources. So on climate actions, we are working on reducing our electricity consumption, optimizing consumption. We are looking at reducing the wastages by introducing new ways of working, and then using the renewable resources or the natural resources for the energy. Our new structure or building in Ambernath plant, I think we will be already launched that, is already silver LEED green building certification. So all these actions are going to help us to create that sustainable business model sustainably. So a lot happening, and we really appreciate your patient hearing and looking forward to engage in a conversation where we can take questions and answer to your satisfaction. So thank you very much. I appreciate your support to Huhtamaki India, and back to the connector to kind of start the question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2.
So can I ask how many people are there on call?
So we have around 80 plus.
Okay, thank you.
If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask the question. First question is from the line of Aditya Khaitan from SMIFS Institutional. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, my first question is, sir, of the sequential growth of 6.6%, so this is led by your realizations or by the volume?
So, sequentially, if you see quarter 2 to quarter 3, I mean, it's a mix of both. So we have definitely, improved our volumes in certain pockets where we had taken this strategic position. Yeah, so the volume growth is around 8%, whereas because realization, I would say, because the commodity has started going down, so in fact we have to kind of pass on the certain raw material changes to our customers. So it's like driven by volume growth.
Okay. And sir, what would be the sustainable tax rates, sir, for CY24 and CY25?
Can you repeat your question?
Sir, what would be the sustainable tax rate? Tax rates, sir, which we can take for CY24 and CY25?
We are talking about financial year 24-25, right?
Yes, yes.
So we have opted for 115J, so we are into the 25% tax regime. And at this point of time, we have a visibility that will go into the tax bracket unless if some new judgment comes, and then we'll have, like in this year, we had a certain reversals of uncertain tax positions. That is in favor to us. Otherwise, we'll be into the 25% tax bracket. We would expect to continue in that.
Okay. And sir, what would be the current utilization of our plant? The current run rate?
So we have various footprints. So we have a flexibles manufacturing, we have a pressure sensitive label manufacturing at various locations. So utilization ranges from 55% to 65%, depending upon the various locations. But overall, I would say around 60%.
Sir, 60% last quarter also was the same figure. So this quarter also, like roughly, we are at almost at that level only.
Right.
Okay. And sir, this Blue Loop brand, I believe, sir, so this kind of, so there are many materials or products of the similar, you can say, of type, like the Blue Loop. So how is Huhtamaki differentiable in terms of their like brand and quality into this brand? And currently, sir, as you had mentioned earlier also that around 20 to 25 products are sold by this Blue Loop brand. So what is the number like for the next 2 years only we are targeting to take this around from 20-25%, and how this will improve your margin trajectory going ahead?
So I think you have asked many questions at the same time, like three. So I'm trying to remember. So first thing is that, the overall Blue Loop is basically, by the way, I mean, Huhtamaki is clearly known as a leader in industry for quality and service. And that remains. With the help of a Blue Loop, it would be, we will be offering certain products which are basically in a mono material category, and those are the investment what we are making. So in a layman term, I would say, without getting into too much technical, there is a new film manufacturing process called MDO, which is machine direction orientation. Or oriented. So that process will be used by Huhtamaki, which is not common across, but we have our own patented formulations to improve upon the product offerings, and that is why we have created our own brand, which is called Blue Loop, which is basically a circularity, like designed for circularity because it enhances the recyclability. And the last point what you asked, if I remember correctly, was how the margins will play along. So basically, as you see that we are definitely getting into a film manufacturing as well, which is kind of a backward integration. So there will be now combination of film margins and conversion margins. So there is definitely potential.
Okay. And sir, this current margins, so currently, sir, we are witnessing that majority of the commodity prices with the rise in crude, they have started to move up. So do you see any sort of a impact in the coming quarters in the margins? So current margins of like 6.5 to 7%, can they maintain, or there could be a risk on to the downside if the crude price like goes up or stays at the current level?
So see, as we work, has to work very closely with our customers, and there are mechanisms. So essentially, I would say, like when we see in last few quarters that prices are going down, we have to pass it on to our customers very transparently. Similarly, if upcoming, only thing is if it doesn't happen very quickly, we have certain mechanisms placed with our customers, which kind of, I would say, protects us, both sides. When it goes down, customers get protected. When it goes up, we get protected.
Okay, so these margins can be maintained, like that's what just I wanted to understand.
It depends, always, this is basically how it's like not only one play, right? It's raw material, productivities, and then the capacity utilization and all these aspects. 4 or 5 levers are there coming together, right? It's only not about the crude oil or only film prices, right? So it's a whole gamut.
Okay. Thank you, sir. Thank you. That's it.
Thank you. Next question is from the line of Nilesh Shah from Arrow Investments. Please go ahead.
Hi, good evening.
Hi, good evening.
Congratulations on a good set of earnings and operational efficiency despite lower sales. So congratulations for that. I have a couple of questions. My first question is that we have shifted 3 plants, small-sized plants, to different larger facilities. So what do we intend to do with the existing old infrastructure that we have? That is the first point. Second, if you can throw some highlight on what we decide to do with the proceeds of the sale of the Thane land, if and when it happens, is there any clarity on how and by when we can conclude the deal? And the third, since we are doing backward integration and starting to manufacture the new films, what is the kind of production capacity that we are looking at setting up? So that will be my 3 questions, please. Thank you.
Okay. So the first question, maybe I'll also invite Jagdish to answer on a couple of them later. So these three small plants what we consolidated in our larger plant. So out of two plants we had leased out. So we have kind of surrendered the lease according to the terms and conditions. And then we have one plant where very small infrastructure available. So of course we are taking a view in terms of our network optimization plan. We will take a call what is required to be done with that small infrastructure. Proceeds of the land, definitely I will invite Jagdish later, but before that I'll just answer the production capacity. So what we are invested now is per se minuscule of what our overall requirement of our films. So we will be definitely looking at and that's what we keep on saying, that network optimization will be one of the key strategy going forward. So right now we have invested in one plant which will be adding somewhere around 10 to 12% of our requirement of the films which we buy from outside, and then basis the overall business case we keep on evaluating the further capacity additions. And I will invite.
Give an idea in terms of number of volume in metric tons or anything of that sort. Is there a number that we can attribute to that 12%?
Not really, Nilesh. I'm sorry. Is it Nilesh, right?
Nilesh, that's right.
Yeah. So look, our products are basically a combination of three, like in the square meter, then the grammage, and then it forms tonnage. So it purely depends upon the product mix what we make. So our products also are ranging from 50 micron or 60 micron to 120 micron, or even some tube laminates like products are basically 200 micron. So it depends purely on a product mix available. So it's very difficult to give a number such as tonnage or so.
Fine, I understand. Just to add on to that, are we looking at only our self-consumption, or are we going to sell this blue loop technology films to other manufacturers as well?
Clearly it's a self-consumption to be, in fact that's going to be this patented technology, and at this moment it's clearly that it is for self-consumption. But yes, we will be exploring the franchise model, not selling to any technology, but franchise model, because as a overall ecosystem in India, and not only in India, elsewhere, customers definitely would have a certain requirement from their purchasing policies. So that is where we will be exploring those options. But at this moment, it's clearly that it's a self-consumption. But we may explore a franchise model going forward later on, but not now.
Thank you. Nilesh, sorry to interrupt you. I will request you to come back in the question queue for a follow-up question.
But when I think he had a question on this proceeds of a Thane land. So I think with a due fairness, maybe Jagdish can answer that.
So thanks, Nilesh, for asking for that question. We still are into deliberation stage, and as of now, we have not formed up that how we are going to utilize that money. First, our endeavor and focus is that we want to close the deal and do that announcement, and definitely we'll come back once we'll have that firm commitment in place.
Okay, thank you.
Thank you. I request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up. Next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, can you elaborate a little more exactly on this Silvassa new facility that will be starting is meant for what exactly? It's for backward integration of the film, or it is and second thing, when you said that is MDO, when we'll introduce this blue loop, so how other machinery and other plants will be able to take it up, or again we need to refurbish those plant or replace the plant? If you can give little more color on that.
Sure. So, see, this investment in Silvassa is basically for manufacturing of the films.
Okay.
Which will be typically blown film lines as well, and this is MDO, which is machine direction oriented film manufacturing. So this comes as essentially a film which will be definitely used on our existing machines. So there is no need of adding any further infrastructure in terms of printing or conversion. Okay, so there is no need. In fact, our endeavor is that we are developing these films in a such a way and our products in a such a way that in fact when we go to the marketplace with our customers, and that's what I indicated, that we are proactively taking trials at a customer's packaging machine so that they also do not have to change any infrastructure at their place in terms of machines or in terms of accessories and in terms of productivity. So that's how our endeavor is.
Okay. And sir, is this film is different from this BOPP or it's the same kind of a film?
So as you said, BOPP, it's a biaxially oriented polypropylene. So it's a one type of film. So there are 100 types of films, right? So
Correct.
Here on this machine, this is basically meant for PE, polyolefin base, and which will be essentially mono material and so on. So that's how it is.
Okay. And when do we expect, and what could be the potential asset turn if one can, and how much investment we have made in this plant?
So investment, this is basically, we at this moment, we are just in the process of investing. So not able to give an exact number, and we are looking at next quarter for some startups.
So it will be a trial run or commercial wind?
Yeah, it's kind of because it's a new technology, patented technology, so the gestation period or trial periods are slightly higher. But yes, we are looking at kind of a start, and then there are certain already commercialized product portfolios which we do it from either from our imported, because in elsewhere in the world they're already started, so we import, and then so there are certain products which are already validated for customers, which will be like commercialized here.
And any color on the asset turn of this investment?
Not really, because as I said, we are just introduced or invested that, so it will have to be kind of going forward. It depends upon how we are able to convert our customers, right?
And last,
yeah.
Is it fair to understand that we'll be converter or film manufacturing as well as converter also, as well as we may be selling to other converter. So this will have wherever we do conversion, we have this film margin as well as conversion margin, and wherever we sell to third parties, it will be a margin of the film, correct?
You can say that.
Okay, thank you and all the best.
Thank you. A request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Saurabh Patwa from Quest Investment Advisors. Please go ahead.
Thanks a lot for taking the question, sir. Am I audible?
Yes.
Yes, you are.
So just wanted to have thoughts on 2 things. One is when we see your 9-month number or even if we see the third quarter number, compare that with the pre-COVID year, which is 2019, the revenue number looks similar. However, the EBITDA margins have compressed very sharply. Of course, part of it is also linked with your gross margin compression. But so the first part of the question was that how much scope you believe there is still left in terms of gross margin improvement. And secondly, you also highlighted that the mono material has a single layer, that means it has a lower volume. So structurally, are we going to see lower volumes and higher realization?
Is that the 2019?
So, okay, so I mean, it's the moment we talk about any number, it look like that we are talking about a forward-looking statement, and which we normally don't talk about that. It's very difficult to say that what kind of a room we have, what kind of margins we are going to have in future. But if you look at our last 3 quarter performance, and there is a good improvement, and there are reasons for that. It's not about that we have the input prices are softening and all, but there are a lot of strategic initiative, and there are a lot of long-term initiative which as a company we took to ensure that we remain competitive in the market. That talk about operational efficiencies, that talk about footprint optimizations, that talk about looking into each and every spend what we do into the company. And having said that, if you compare that 7.6% EBITDA what we have in this quarter, third quarter 2023, and if you compare the same, it was a 3.3% on third quarter 2022. So there's a significant improvement if we talk about that compared to last year and this year. And we believe that our endeavor is that we want to remain, like if we talk about our aspirations for 2030, we are saying that we would like to grow very aggressively in top line. At the same time, we have aspirations to be in a double-digit gross margin, double-digit EBIT margins. That's our journey and that's aspirations we have. Now, in between, it's very difficult to comment on any number, but I think that talk about our intent and that talk about our performance what we had in the last couple of quarters.
Okay. So again, so that leaves my second question actually, which I asked already. Like, so when you say that a part of the growth will be driven by the blue loop, which is single layer and which will have lower volumes, which you highlighted at the beginning of the call. So how does that essentially also mean that since we are also targeting a larger, sharper revenue growth, the pricing would be substantially higher?
Yeah. So I think let me, as I said earlier, the blue loop talks about three things together, right? I mean, let me remind that one is about the protection, because our products are expected to provide the protection, which is a barrier property, right? I mean, for the food packaging or in essentials packaging, there are two requirements, OTR and WVTR. OTR is oxygen transmission rate versus WVTR is water transmission rate, right? So those are important. So while we offer the same protection to the brand owners, which is our STMT customers, what we said, the products will be recyclable, which is where that monomaterial comes in, and then affordability. So essentially, in order to make those affordable and because they are monometal, so there will be definitely a reduction in a plastic intensity. So essentially, the plastics will come down, and that's the value proposition for our customer, that they reduce the plastic. At the same time, the protection for the product remains the same. And because there is a reduction in the plastics and so overall this one, there is a affordability. At the same time, so as you said, maybe let me preempt your question. You are looking at volume, means tonnages, probably they may come down, but look, ultimately the square meters will be same. And because we will be using more expensive materials, that is where the realization might be better.
Understood. And so just one clarification, when you mentioned in answer to the previous participant question that your volume growth was 8% and your capacity utilization is same as the last quarter. So does that mean that as you are trying to create a market for blue loop, you are importing some bit of it, and that's why there's this gap between for a similar capacity utilization, volume growth is higher, or is something else?
Not really. So the import is very small, and that's basically on a only one particular category of a product, and that does not really influence the overall capacity utilization. But at the same time, as we mentioned earlier, we are having four-pronged approach. So operational excellence or unlocking the productivity internally is definitely showing certain results, right? So while I said capacity utilization is various plant locations, so certain plants are now doing really well, so that it's realizing the productivity benefits. So overall, I would say that my number looks to be 60 to 63% on capacity utilization, which is slightly up than the previous quarter, whereas volumes have gone up by 8%. So it's like a combination of productivity improvement and the capacity, slight improvement in capacity. At the same time, maybe one point I would like to kind of explain this. As a converter, we have a sets of processes, like we have a printing, we have a lamination, we have a conversion, it's a slitting and so on. So typically we look at a capacity utilization at one important operation, which is a printing, right? So that's where but as a whole gamut of the company, so capacity utilization combines all other equipments as well, right? So that's how you need to calibrate.
Understood. So just last thing, then I'll join back with you, is on the slide 12 on blue loop. You have mentioned, highlighted about projects in international markets, which forms part of the pipeline. Can you just throw some light on it?
Yeah. So
what exactly
we are having large export-based customers from India we service. And there are projects which are basically with existing our exports customer we are running. At the same time, as I said in the previous call as well, this is a global project, so we are investing parallelly in Germany, we are investing in India, we have invested in Turkey, we are invested in Thailand. So the projects are also emanating from those countries also, which are kind of required to be supplied from India and so on. So there is a good collaboration across, and so that's how. And there are certain global customers we have. I mean, I can't name those customers, but we service them from India globally for certain products, and then certain products are serviced by our global other regions to even to India, basis the product structures and constructions. So there are good pipeline available there.
Understood. Thanks a lot, sir. We'll join back.
Thank you.
Thank you. Next question is Harshit from Robo Capital. Please go ahead.
Hello.
Hello.
Yes, sir. Sir, I want to understand where the industry is headed, like what the competitors are working on and what special the company is doing to add value to the customer. Like how it will get ahead in the competition.
Mm-hmm.
Yeah.
So if I understood your question, you would want to understand more on a flexibles packaging industry market situation, or
yes,
and then what competitive activities. So then look, maybe let me start with the overall industry construct. And as you can see that we have a mix, erratic, or I would say mixed monsoon. So which is definitely every company is looking at it very cautiously, how the volumes are going to get developed. At the same time, there is a mixed signal because of these things. So one, we are seeing certain volumes uptake on a on a I would say lower product category, lower pyramid, which is clearly seen as a customer or consumers are down trading, where we are seeing some volume, but overall there is a cautiousness, and which is again reflecting onto the flexibles packaging industry. So definitely flexibles packaging industry, if you see for last 10 to 12 years, have been kind of pushed to the commoditization, and that is where we as a Huhtamaki come in picture, because we keep on raising the bar in terms of innovation and creating the options to the customers which are basically better. So from a competitive activities, of course, competition we don't really look at from a price, from a volume perspective, but we consider ourselves from what we take to the market from a innovative packaging solutions offering. So that is where we are trying to play. And as I said, we have that our strategic intent, and we call it where to play. And that where to play is clearly articulated. As a globally, we are food packaging solution company and daily essentials, and that is how we are aligning our aspirations. We are defining categories, we are defining our products, we are defining the structures which we are stronger and are having the ability to create a differentiated offerings, and that is where we will be continue to play. We do not intend to, thank you. We do not intend to play in areas where there are already commoditization happen.
Okay, sir. Sir, and can you share some light on blue
loop?
Yeah, blue loop. Because the line was cut, so can you?
Yeah, I think we had 3 to 4 questions on blue loop. So maybe to fair, I will again explain. So the blue loop is basically our enterprise-wide product offering, and this is the branded solutions on a sustainable packaging, which are basically having a IP innovative products which are patented. We have invested equipments in our Silvassa plant, and these products are basically will give our customers the affordability, recyclability, and the protection required for their products without compromising quality and service. and this is basically coming from a sustainable product offering. So this will have a lesser plastic, so it reduces the carbon emissions and so on. So that's how the overall offering from our Blue Loop.
Okay, sir. Thank you.
Thank you. A request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Vipul Kumar Shah from Sumangal Investments. Please go ahead.
Hi, sir. So 3-4 years back, if I remember correctly, our margins, EBITDA margin used to be in the range of 10 to 12%. And so we have come down very drastically and we are recovering very gradually. So my question is, when can we expect that type of margin, and what is the roadmap for the recovery of EBITDA margin?
I think this question was answered by Jagdish earlier, that aspirationally, yes, we want to go to double-digit EBITDA and EBIT margin in near future. But that is what we are investing into, the new technology and innovation. We are looking at unlocking our unlocking internal efficiencies, operational productivities, and so on. So very difficult to put a date to it, but of course, I mean, we are thriving or striving to achieve that as soon as possible or as early as possible.
Okay, thank you, sir.
Thank you. Next question is from the line of Priyank Parekh from Abacus Asset Managers. Please go ahead. Priyank, may I request you to unmute your line and go ahead with your question, please? Due to no response, we move on to the next participant. Next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and thank you for this opportunity. Just taking that discussion forward, as you mentioned that we are in the anvil of improving our margins and going to that double-digit number. So I think, so sir, the employee benefit expenses as a percentage of sales have remained elevated over a period of time. So what steps are there in the annual, or the rationalization steps for as a percentage of employees cost as a percentage of sales can be lowered going ahead?
This is a good observation, I would say. So we also realize that, and that's why if you see, we have taken certain strategic initiatives, and one of them was basically footprint rationalization, and that's what you would have seen announcement of consolidation of smaller plants into large, so which should help us to kind of improve upon our synergies. The second part is yes, I mean, as we said, we took a strategic position in first quarter of this year, and despite and you can see that that strategic position helped us to revitalize our trajectory in terms of EBITDA or EBIT. But that strategic positioning was basically from a different reasons. That it is in spite of losing volume, we wanted to make sure that we have our financials become stronger. And now riding on this, we are definitely looking at how we grow further, and grow further in terms of volumes, grow further in terms of revenues. And we do that, that's where the ratios of, let's say, personal cost per sales will start improving. At the same time, we are in India, and you know the inflationary environment and so on. So it's our responsibility as a large corporate company that, of course, we need to improve our lives of our employees as well. So we take both actions in a same breath.
Yeah, and just to add on that, like if you look at 9 months employee cost, we are more or less flat.
Yeah.
In a market where the employee cost inflation is in the range of 8 to 9%. So if you look at a 9 months data, it's almost flat.
And
902, yeah.
And that too with annual increments.
Yeah, that's what I'm saying. Let's say 8 to 9% employee cost inflation market.
So the headcounts have also remained the same. Is it a like-to-like comparison when we compare the 9 months for 22 and 23, the employee cost, or how should we look into it? As you mentioned that there is no increase.
No, so employee headcount has changed. So, for example, at the start of the year, we probably had close to 3,000 employees, and now we have around 2,600 or so. There is a definitely reduction of number of employees, around 4, and which emanated from these consolidations and certain natural attrition and so on. So that's how we are also managing on that front.
So actually, sir, that explains the flattish number for 9 months. It is not that we have kept the number low because of containing the employee cost. It is the lower headcounts and that attributed to the lower employee cost.
But that's fair, no? I mean,
no. I was just coming to the point which sir, with our CFO explained that it has remained flat. But when you take the like comparison, it is because of the reasons as explained. It is not that we have kept it flat because of our efficiencies rather. That is my moot point was.
No, I would have slight maybe not disagreement, but look, I mean the employee probably headcount reduces, but then at the same time you pay annual increments. You also promote the deserving employees and so on. So there is an increase. There is also inflation. Like for example, we have almost like 1,800 or more than that operating people on the shop floors where their DAs keep on changing. And then I think as a fair company or organization, we follow each and every law, which is law of the land. So that's what the increases or inflationary increases we have to deal with, and how we deal with. So in fact, this is in fact you can see in a positive light that there is a 12-13% reduction in the employees, and because of course there is volume challenge, and then but that's how we are reacting to it, and then unlocking the productivity. So which augurs well for productivity improvement.
Thank you. Paket, I'll request to come back in the question queue for a follow-up question. Next question is from the line of Priyank Parekh from Abacus Asset Managers. Please go ahead.
Yeah, am I audible?
Yes.
Yeah. Thanks for the opportunity. Just wanted to understand on the Blueloop. Is it going to replace our existing product, if any, or it is going to be the increment sales?
So again, a good question, and happy to see that you are thinking very deeply about companies. So it will be mixed. Okay, so there will be replacement, and then there will be also new. So I would say replacement will be like largely because companies are kind of going from a multi-layered plastic to recyclable plastic. So that definitely is a replacement. At the same time, because this is a very innovative product and can offer certain barrier properties which are unheard of. I mean, because of the confidentiality product requirement, I can't give you the values, but there are certain products which are clearly structures which are replacing certain expensive material, and that helps both customers as well as us. So it is going to be replacement and new opportunities which are not at this moment to us. So that's how I would put it.
Okay. And second question is this this IP would be owned by our parent, or is it going to be India specific IP? Like how this arrangement is going to be?
Parent.
Okay, so being a technological driven IP, do we have to pay any sort of royalty or any sort of that thing to our parent going forward?
So we are not entering into any specific contract about this. We do have any existing agreement in place which we have signed long back.
Okay, so where I am coming from is the impact on our margins. Like if the incremental margins we are going to do with Blueloop, is to be, consumed in form of any fees or royalty, won't have that great effect on our margin, despite being a value-added product.
So we are not signing any new agreement per se on that aspect.
Okay. Okay. Got it. Yeah. Thank you. That's it. So.
Thank you. Next question is from the line of Hiten Borisha from Sequent Investments. Please go ahead. Hiten, may I request you to
Hello.
unmute? Yeah, go ahead.
Yeah. Thank you for the opportunity, sir. Lots of my questions have been answered. I just want to understand, as you mentioned, our realization is, utilization is improving. It's at flat at 60% as well as volume is going up. So, like, what kind of growth we are looking, considering the raw material prices also coming down, but demand is also going up. So, what kind of growth we are looking for, let's say, next 1 or 2 years?
So look, we classify ourselves as a derived demand industry, right? I mean, we do not have our own brands which we can make a marketing campaign and influence the consumption. So essentially, what our customers' consumption patterns actually defines our growth trajectory. So providing any guidance or visibility for next couple of years would be difficult. At the same time, as I said in the past conversation, definitely we took some strategic position at the start of the year, which showed that it is clearly giving us some results. And we are clear now how do we want to play in India market, which is known for a very huge competitive activity and the cost consciousness. But within that, we have definitely clarity about what we need to do to grow our volumes and the revenues. As you said very clearly, our prices are predominantly decided by the raw material price movement because we have a lot of agreements with our customers. So it's difficult because raw material prices goes up, revenues goes up irrespective of volume growth as well. So it's like a vice versa. So at the same time, the mute point is that we have a good clarity on our strategy, how do we want to play, which gives the confidence from for last 3 quarters performance.
Okay. Yeah. And sir, one more question on the inventory side. Can you help for how much days the inventory be kept in inventory?
So it's roughly 30.
Less than a month.
Less than a month. 28-30 days is typically cycle. We keep on adjusting our order cycle basis that.
28 to 30 days, right? Okay.
28, yeah. 30 days.
Thank you. Ladies and gentlemen, we'll take that as the last question. I now hand the conference over to the management for closing comments.
Yeah, Jagdish Mohan.
I think, again, I just want to reinforce the same message where we started. Management is taking all steps to ensure that we continue to perform better. And last 3 quarters, when we look at that, we are trying to make a significant improvement on that. We'll continue to make the continued effort on that. And I believe there was one question about the days of inventory. And when we talk about days of inventory, so there are a mix of many things. So specifically when we talk about the FG and those kind of inventory, we related that it's a 20 to 30 days. Just wanted to clarify that. With that, I just Navin for your last comment.
Yeah. So thanks everyone on call and ICICI to organize this call. And I could see a lot of questions were revolving around our performance of last quarter as well as definitely certain things which are happening on the volumes, the blue loop, and the overall trajectory where we are heading for. So thank you for all these inquisitive questions, and I hope we were able to address and answer all of your questions, and would look forward to continue this journey and as well as continue this engagement with investors every quarter. Thank you and appreciate all your support.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.
Thank you.